Hello traders, you're welcome back to the Forex Geek channel. Have you ever wondered how to spot when big money is moving the market? You might be looking at price charts all day, but if you are ignoring volume, you are missing half of the picture. So in this video, we are diving deep into the unbalanced volume strategy, an underrated yet powerful tool that can give you a serious trading edge. So I'm going to be adding the unbalanced volume indicator to the chart. Alright, the OBV helps you understand whether price movements are supported by strong buying or selling pressure. And in this video, I'm going to break down exactly how it works, how to use it in your trading, and the biggest mistakes to avoid. So stick around, hit that like button, and if you are new here, don't forget to subscribe for more powerful trading strategies. Alright, let us start with the basics. What exactly is the unbalanced volume? The OBV is a momentum-based indicator that measures volume flow to predict price movement. It's pretty simple. When price closes higher than the previous day, right? When the price closes higher than the previous day, that day's volume is added to OBV. Then when price closes lower than the previous day, the volume is subtracted. So this creates a running total, helping us see whether volume is supporting the price move or not. And this is important. Just because price is moving up does not mean the trend is strong, okay? If OBV is not confirming the move, it could be a trap. So how do we actually trade using OBV? There are three key ways to use this strategy effectively. The first is for trend confirmation, alright? The first and easiest way is trend confirmation. If price is making higher highs and the OBV is also making higher highs, it confirms the trend is backed by volume. For example, we can see what we had happening around here, that price was making higher highs, right? Can we see that price was making higher highs and higher lows, and you can see that the OBV was also making higher highs, right? So this shows that the trend was backed by volume, meaning that it was likely to continue. And as you can see that the trend actually continued despite, the pullbacks, okay? But what if OBV is flat or going down while price is rising? All right, in a situation whereby you have the OBV being flat or going down while price is rising, it is a red flag. Okay, it suggests that the move might be weak and could reverse. So one of the most powerful ways to use OBV is to spot divergences. When price is making new highs but the OBV is failing to do the same, it can signal that a reversal is coming. All right, smart traders use this to predict when a trend is losing steam before it actually reverses. Okay, so OBV is also great for confirming breakouts. When price is breaking through a key resistance level but OBV is not increasing, the breakout might be fake. Okay, let's see if we can find a very quick example. All right, Okay, we can see that we had a resistance zone around here. You can see that we had a resistance zone around here, and just shortly after the price rose above the resistance zone, it dropped back down. So this was probably a false breakout, and as we can see that the OBV was not increasing. It was not increasing significantly when this breakout happened. As we can see that this was a zone, right? This was a resistance zone where we had a few rejections. We had a rejection here, we had a rejection here. Then at this point, the price broke above it and fell back, below the zone. And here it got rejected again, and here again it got rejected, and here again it seemed like another false breakout happened, and then the price finally reversed to the downside. Okay, so take note of uh the OBV increasing when a breakout is about to happen. All right, but if the OBV is rising sharply, if the OBV is rising sharply when a breakout happens, then it could mean that the breakout is valid. Okay, it's going to give extra confidence in the breakout. All right, let's see if we can find such an example. Okay, we can see that we had a breakout here. This is a trend line. You can see that this was a bearish trend line, or this even seems like a falling wedge pattern, or a bullish pennant. But once the breakout happened, you can see that right after the breakout, there was an increase in volume. So the volume backed, or rather supported, the breakout. So in this scenario, it adds a layer of confidence to the breakout. Now, before you go and start applying OBV, let us talk about some common mistakes that traders make with this strategy. The first is using OBV alone. OBV is powerful, but it's not a magic bullet. Always use it with other indicators like moving averages, RSI, or support and resistance levels to confirm your trades. The second mistake is ignoring market context. Volume patterns change depending on market conditions, and OBV works best when combined with an understanding of market trends, news events, and overall momentum. And finally, do not make the mistake of expecting OBV to predict exact entry points. OBV is great for confirming trends and breakouts, but it won't always tell you the exact moment to enter a trade. So you should use it alongside other technical analysis tools for better timing. All right, traders, that is a wrap on this breakdown of the unbalanced volume strategy. Now you know how to use OBV to confirm trends, spot divergences, and filter out weak breakouts. So which OBV strategy are you most excited to try? Let me know in the comments. If you got value from this video, don't forget to hit that like button and make sure to subscribe for more advanced trading strategies. Turn on notifications so you never miss an update. In the meantime, thank you for watching and happy trading.